Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. So here we have not a lot of surprise in the price action. As we said in the weekly report, we treat this upward action that has happened last week mostly as a temporal relief in the overall bearish trend, because we do not see currently neither economical nor some fundamental geopolitical reasons to suggest bullish performance of the euro currency. So we think that it is temporal, and we're still watching for a longer term target around 105. It's probably just a question of time when the market will re-establish downward action. Speaking on current situation, we're still watching for intraday support areas. So as we said, since theoretically we still have chances to see A, B, C, D completion at the OP around 12:30, although I have the big doubts, to be honest, that will happen. But at least theoretical chances still stand on the table, and we have to analyze this situation. And we said that performance of the euro currency around major support areas on the intraday charts gives us the answer whether we will get this upward action or not. So the breaking of the support areas means just one thing, that market is ready to challenge the previous lows and keep going lower. That's the actually result that we should get by the end of this week. But if you take a look at the cross-market analysis, particularly speaking on the 10-year yield that we every time watching, we have no real reasons to be optimistic on the performance of the euro currency. So this is, guys, not the daily, this is weekly chart. And you can see what has happened this week. So interest rates on 10-year treasury bonds have jumped to the 235 area, and has been broken through the major 618 level. What is more important is that market totally ignores the bearish reversal pattern, which is the butterfly. And as you know, the butterfly has a feature: when it fails, it usually fails miserably. So it means that market very often, when it shows no proper reaction on the butterfly, usually tries to accelerate in the opposite direction. And here I suspect that only existence of the weekly overbought area that you can see here, it might be the barrier before upward continuation. So it prevents just fast explosive rally on the interest rates right here. So you can see inflation is rising. So additionally speaking, this is really a big challenge for the United States economy. And somehow I suspect that United States, just to control the rising of the interest rates, might make a decision on escalation conflict in Eastern Europe. So this is one of the tools that might be used to save time for its own economy and support it, and also make some damage for all United States rivals, including the China, because you know that the European Union is the largest partner of the China in the trading. So this just significantly increases the risks of the escalation in Europe. So I'm just worried about this might happen. Because here you can see, despite that the Fed decision, interest rates is coming out of the control, is just moving higher. It's a really big pace. So that's what we should keep in mind. But for a short-term situation, we're just watching on the technical side, and a rally on interest rates, it promises nothing good for euro currency in the short-term perspective. So it means that, to be honest, guys, chances that market will just break this area and will keep going lower increase significantly. So in lower time frame, so take a look at the 4 time frame chart. Here you could see that the market is forming the retracement that we have suggested. And in fact, we have agreed to keep an eye on the 2 levels here. So that could tell us whether market is ready to trying to reach the OP or not. So for instance, on the hourly chart, we said that the first level, it might be confidence with the agreement with the COP. But at this point, you can see market shows very weak reaction, despite that it's a really strong level. It's confluence and extension. And here we do not see some proper reaction forming some pattern or something. Market just keep going lower. Next level will be the OP is 109.30. That's actually the final bullish outpost. And the breaking of this area tells us that the bullish game is over, and we should be ready for a challenging of these lows and downward continuation in euro currency. In the current circumstances, especially when we have the performance of the interest rates that we just have seen, the reaching of some strong support is not enough for taking the position. So we have warned you about this and tells us again. So if you see that market reached some support and by itself the support looks really nice and strong, be aware of taking position just blindly. Wait for response. Wait for market forming of some pattern here, some reversal pattern. For example, it might be head and shoulders or something of that sort. At least wait when the trend will turn bullish, because we are trading the trend as well. So since we have the daily bullish trend right here, you need, before taking position, wait when the hourly trend will turn bullish as well. So it's some kind of the Jordanopoulos that call it minesweeper entry tactic. So you need to see upward action, trend turns bullish, and then on the minor retracement you could try and take the position with the stops against these lows. This should save lots of money if you will be wrong and market later will keep going lower. So do not take the position in current circumstances blindly and keep watching what will happen. Currently, guys, I'm absolutely not impressed by this type of action, this performance. Even you could see here some acceleration is coming on the CD leg, which also should be treated as a bearish sign. So that being said, on euro currency, you can see currently we have really very few reasons for optimism, and personally, well, actually, here will be the culmination moment here, and that's the major thing that we should keep an eye on. The breakout of this level tells that we probably are going to the next lows, and market should break down the 108 previous lows as well. So be extra careful currently with taking any long position if you intend to.